Today we're talking to Jim Boston. Jim is a good friend of mine. He's also a client. And I've known Jim for 10 years or so, going back to working at the bank together. And now we don't work there anymore. And we both think that's kind of awesome, but also besides the point. Jim is a mortgage advisor, and he works for Union Home Mortgage. And I wanted to look into or try and tackle two things with Jim. One, why is it so annoying to get a mortgage? And two, is there anything to this trend of people not buying homes? Is this a thing that's a little bit overblown, or is it a real thing? Because I hear a lot from my clients who are the boomers and are retired that this trend of more people in their 20s and 30s just choosing to live at home. And I just wanted to see if the data supported that or if that is overstated. And Jim seemed to be the perfect guy to chat with about that. So thank you, Jim, for coming through.
Very
Appreciate
welcome. Happy to be here.
Yeah, you are. It's a little early for beer, but we'll get started anyway. So
5 o'clock somewhere, right?
yeah, I think we got to go to Asia for that.
Yep.
But it is awesome to have you here. So you've been a loan guy for coming up, got to be 20 years ish.
19 years. Yep.
So you are a lifer.
I'm a lifer. Yep.
Is that what was that the goal coming out of college? I mean, you couldn't have known while you were taking
Yeah.
your finals in college that like I'm going to go be a mortgage guy at a bank.
Yeah, I was actually enterprise rent-a-car guy
Okay.
coming
All right.
out of school, so
Shout
that was like boot camp of the business
Shout out
world.
to Enterprise, and yeah, no free ads.
Running my business. Then I got into Chase as a banker, and then a year after
Yeah.
that, I became a loan officer for Chase doing mortgages, and I've been kind of in the game since then.
Yeah. So here's the thing: you are on a very short list, and by that I mean I can think of two. So when we were working together at the bank, I think that got my attention is, I don't think it's super uncommon to have an attention to detail, but you were one of two loan officers that I worked with or got help with for my clients, and I had to have worked with over a dozen over the years, where you did not treat these people like transactions. If there was like extra work to be done, you just talked to them like they were real people who were, going through a very important event in their lives. So I really appreciated that, and so I think that's probably point number one on why it's common for people to look at getting a mortgage as something to be dreaded, because well, there's a number of reasons, but I think one of them is just really what seemingly would be the easiest thing to prevent was just like, just don't be a jerk and try. So you've got those two things kind of on lock. So can you talk a little bit about that? Like your process from start to finish is probably so ingrained in you that like people wouldn't. But like, what does getting a mortgage with you look like from start to finish?
Well, like you were saying, you got to make them, feel like a human being. This is one of the biggest transactions of their lives. It's a huge life decision. It's very, very stressful, naturally. And one of the biggest things is being prepared, like getting them prepared from the beginning, like telling them what documentation is needed, sending them through the underwriting process before they even make an offer on a property. That makes their offer a lot stronger because it shows that we went above and beyond just doing a credit check. We actually vetted their income, their assets, everything about their whole picture, so that when the offer goes in, the listing agent is much more impressed with that versus a lender who wasn't prepared and just pulled someone's credit and threw it on a piece of
Yeah.
paper.
Do you do like a sit down at the beginning where like, all right, here's everything you're going to need, because I think probably the most common grievance that I got over the years is, and I wrote down death by 1,000 paper cuts, because it's like they get told, get these 5 things, right? And then like a few days later, it's like, oh yeah, I need this and that. And then a few days later, it's like, oh yeah, can you get me this and that? And I think that seems to be like a common thing that loan guys do, and it's it doesn't make them evil, but it certainly does make it
Annoying.
yeah, and for the least efficient and smooth, right? So like, I also wrote down like that you make this, or that a good loan experience would be like with the least amount of friction possible, right?
Right.
So like at the beginning, do you do like a 10-minute call or like an email where you're like, these are all things I'm going to need, and I'm gonna need you to get them. And like, how does that go? Or is it just like an email of like, here's a checklist? Because I can't imagine that, particularly for like first time homebuyers, are like, I don't know exactly what that document is. Or do
Yeah.
you just have like a call with them where you get everything that you need from them, or explain everything you need
Well,
from them?
everything's kind of pre-planned from start to finish. So I have the initial goals call when I'd get to know them, learn about what their goals are with home ownership, types of things
Oh,
that they want, establishing a budget with them, and then we get into all the paperwork that is needed. I let them know that this is a lot of paperwork, but if you get it all to me at the beginning, it's going to make the process much easier when we actually get into the underwriting part of it. So the underwriter is always going to ask for some extra things because they review documents and they might open up other questions. But I get as much as I possibly can at the very very beginning to make that part of it as smooth as possible.
yeah. Another thing that I think catches people off guard is towards the end, like when it comes time to close. And I haven't bought a ton of properties, but it's been a few. I don't think anyone ever told me before closing, like, don't make any purchases. Or and we've probably laughed about some stories about, like, yeah, some dude bought a car like the day before he was supposed to
Oh,
close, and like
I got it. Yeah.
it busted the deal. And like, you'd think that at the beginning. So this is probably one thing, probably for the mortgage advisor community, of like, think of everything that could make this go wrong, and
Tell them at
tell
the
your client
beginning.
that in the first 7 minutes, like, here's what I need you to get me. Here are the things that I absolutely need you to not do when it comes time to close, right? Like,
Yep.
um, this kind of communication would seem to be commonplace, and I
It's
think
not.
it's not at all.
It's not. No.
Why is that?
I have. I don't know. I mean, I tell people at the beginning. I said there's a couple different things. Like, don't quit your job. Don't change jobs.
Quit your job.
Don't buy anything big. Don't open up any new credit cards. Don't open any new debts. Don't move a lot of large sums of money around because we're going to scrutinize every large deposit that is not your payroll coming in. So we tell them all these things at the beginning while I'm having the goals call, while I'm talking to them about the doc list that's needed. So it's all about getting them prepared, and the process
Yeah.
goes pretty seamless if you prepare them at the very beginning.
Well, yeah, you're not just preparing them to like get it done. You're telling them in almost a way that it should be. I think if you're doing it right, it should almost be like shocking or like daunting at first. It should, and for the first time home buyer, it probably scare them, and it probably should, because there are a whole lot of things that could bust the deal, right?
Oh yeah.
All together, and nobody says it. My guess is, it's a completely amateur psychologist, is that I think people don't like giving other people bad news, or things that will make them look like the bad guy, and so they just skip it until right, and then they just cross their fingers that their omission of telling them the bad thing doesn't come back to them. I get that. You think there's anything to that, where like, because otherwise every loan guy would say, you cannot do this, you cannot do that. Um, why else wouldn't you do that?
Well, we prepare them as best we can up front. That's a lot of loan people don't do that, but the right way
Right.
to do it is we prepare them as best we can up front. There's always going to be something that could go wrong when you do that. You could get a low appraisal. There could be other issues. What if someone loses their job during the process? But when you do get bad news, you rip the Band-Aid off immediately and you call them right away. You don't let it wait. You don't let it fester over the weekend. You get in front of it. You attack it. You call the real estate agent. You come up with a game plan and you fix it.
It's like The Godfather.
Yeah.
Mr. Corleone
Just
is
right
someone.
away, yeah,
Mr.
don't-
Corleone is someone who expects to hear bad news immediately, or
Yeah,
bad news
I-
at once. And like, I think everybody's like that. Why wouldn't you want to know, if there's going to be bad news and what you can do to avoid it? But I do think there's something to that, and then people, particularly maybe, sorry, I know it's mortgage advisor, but I'm just hardwired to hate titles. So
Yeah,
sorry, you're a
yeah,
loan
no,
guy for the
that's
next,
good.
30 minutes or so. I think loan guys are afraid to jeopardize this deal, and so they will avoid anything that is going to jeopardize the deal or make it seem scary. When I think the natural the best course of action is, give me all the scary stuff right now, so that I can avoid, right? Like,
all the ways to avoid hiccups at the beginning, and then if something does pop up during the process that's unexpected. I've had several other loan officers say, "Oh, it's Friday, I got some bad news. I don't want to ruin this person's weekend, so I'm just going to
oh,
wait till
God.
Monday." No, you tell them. You tell them immediately. This is the biggest purchase that they're going to make in their
Bad
life.
idea.
You have to take it seriously. Put yourself in their shoes. Think about how they're feeling and empathize with them. And then and help them come up with a solution. Sometimes you're going to be the hero in these situations.
Yeah, and what's the opposite of being a hero? Is you're the bad guy. Like if you don't give them everything that they need to know, then at some point they're going to figure out like, man, he could have told me that
Yep.
this was going to bust the deal. So what was that funny story that you had about this gets into the other section, right? Of like, there's stuff that loan officers do that make this process a big pain in the neck, right? What are common things that you see borrowers do that shoot themselves in the foot? And then what's the crazy story of the one thing that
The one.
out of the ordinary that because I remember that story being pretty funny.
Well, not everybody's going to listen. That's the that's the other problem.
Well,
So,
yeah. Well, that's yeah. I guess that's on them, right? So
Yeah.
is that a common thing that people do that
not that common, but
jams them up?
it happens. I can give you a story of this was probably seven 7 or 8 years ago. So this guy's debt to income ratios are right below 50%, meaning like any more debt, the deal
okay.
is dead, right? So I educated him on all this stuff at the beginning. Didn't listen. We get to 2 days before closing. I get a call. Everything's clear to close, ready to go. I get a call from my auditor saying, "Hey, we just got a flag for a credit check from a car dealership. Can you call the borrower and just verify you didn't open up any new debt?" So called him up, and he said, "Well, no, I bought a BMW."
Nice.
Oh, okay. Well, how much? It was 80,000. $900 payment added to his ratios.
And was it when you told him that? I mean, did it kill the deal altogether, or
Well, I had to make him pay it off to qualify.
okay?
Well, his mom paid it off actually, but
Oh, that must be nice.
yeah.
So when you at the beginning when you said you educated him on this and
Yeah.
you told him,
He said your ratios are very high, so I can't, even a small credit card could hurt this. So like,
Yeah.
don't do anything right
yeah,
now.
was this before COVID when more stuff was remote?
This was well before. Yeah, this was about 7
Okay,
years ago.
so were you actually sitting with him?
Yeah,
in the
so
bank when
this
you-
was in the bank. Yeah.
Okay.
I'm talking to him.
And the reason I asked is
stuff.
like you couldn't, if you were having a conversation with him after COVID and you were telling him what he needed to do and educating him, that's a lot different medium than you guys sitting in a bank together and you explain it. You explain to him.
Yeah.
So like this makes it even worse for him, right? Because you guys were sitting together, you're telling him what he needs to do and not do, and yet like he still blows by, which means like you were probably sitting across from him and he's probably like doing sports betting on his phone or like
not listening. But he did make a comment at the end. He's like, "Well, you already issued the final approval on the loan." I'm like, "You haven't closed yet. We have the right to check everything up until the minute before closing. Are you still employed? Have you had any credit checks done? All that stuff."
Yeah.
So
Well, you're making the classic mistake of people assuming that all people have some ability to use logic, and
not always the case.
yeah, I mean, present company included. I mean, I can get absent-minded myself, so I think the education piece is super important. So, off the top of your head, if there was one or two things that are the most common things that borrowers do to make this process more difficult and more annoying than it needs to be, what do you think those are that they should either do that they're not doing or quit doing because that they are doing and it's getting in their way?
One of the main things is if they're slow to get us documentation. Especially if we have a 3-week closing or 4-week or something really fast, like you got to get me the documents on day 1 or 2. Sometimes they just they piecemeal it, or yeah.
Oh, so you'll ask for like 8 things, and then they'll be like,
They'll give me
"Oh, hey
2.
Jim, here's 3." And then I'm going to Florida for the weekend, so I'll get you the rest when I come back.
Or they'll take a picture of I'll ask for their bank statement. They'll take a picture of their computer screen showing the balance, saying, "This is all you need. It shows the balance." I'm like, "No, we need the full statement because we need to review all the transactions
Yeah.
to make sure there's no large deposits, that sort of thing." So it's when they don't follow instructions.
Yeah. And
Get things into us fast enough is.
well, that's what's too bad is because for a lot of people, unfortunately, follow like the instruction of follow instructions is subjective. So I think you got to say like follow these instructions to the letter, and if you want to close on time, give yourself 36 hours to do this. You know,
Yeah.
something
Well,
specific.
we give
like
them a
that.
time frame. We do, depending on how fast the contract is. If it's a 3-week contract, I'll say 24 hours. If it's anything longer than that, I'll be like, all right, you got 20 or 48 to
Yeah.
72, or something in those
Okay. So,
realms.
I mean, really, you call this like, hey, borrowers, take this seriously, right?
Yep.
Because I've probably been guilty of it myself,
Yeah.
right? Where it's like, yeah, I'll get it done, and then you go on with your day. You're in the middle of your work day. Next thing you know, it's like the next work day, and then like that day
Yeah.
ends, and here you are. It's you're almost 2 days later.
And really, when you break it down, it only takes 15 or 20 minutes to put it all. You just have to carve the time out, do it in the evening or on the weekend, and just knock it out. It doesn't take that long.
15, 20 minutes to get all these
I would.
financial
I mean,
documents.
because everything's online, you pull
I
PDFs
mean,
of bank statements and.
you must be the most organized person ever.
Yeah, okay. All right, maybe half hour,
Okay.
45 minutes.
All right, that sounds
Just depending on how technologically savvy someone is. If they're not tech savvy, we just have to kind of walk them through it. I'll have my assistant talk to them about just walking them through the process of pulling the PDFs from their bank and that sort of thing.
Okay.
So some people aren't as quick as that as others.
Speaking of banks, we used to work for one together, and now you work for a mortgage company. What's the difference, and what's the difference to the borrower, and what should they know when they're deciding between using somebody who works at a bank versus a place like Union Home Mortgage that doesn't have bricks and mortar?
Yeah, so we're an independent lender. We're also a correspondent lender, so we have access to a lot of different loan products. When you go into a bank, you just have whatever they have to offer, whereas we
Okay.
have the whole marketplace to go around for. We also have a much smoother process in general. Correspondent lenders, less red tape, and things just move a lot quicker. A lot of times they don't have what's called underwriting overlays, so we underwrite direct to Fannie Mae, Freddie Mac, and FHA. We don't have these extra layers that we put on there that make it harder for people. We just go direct based on those guidelines. Whereas the banks, most of them will have extra guidelines or overlays to
So
make it
this
harder
be
for
like
people.
Progressive Insurance, who can like go find the best quote and place the customer with the best product available. Sort of, is that a bad analogy? Where like, it would be like a insurance broker who can get one of 10 different policies from 10 different places.
Well, it depends. It
This is
depends on the
different.
type of loan they're taking out. So if they're taking out a jumbo loan, which is any of the higher loan amounts, like higher than 850 or so, those are different investors that we use to actually place the mortgage and find the mortgage. For the Fannie Mae, Freddie Mac loans, the more common ones, we actually service all the loans in house at Union, which is great because it makes refinancing a lot easier if the loan's already on the books. A lot of correspondent lenders like to sell the servicing off, which makes it really, really annoying after closing when your loan's sold.
Okay.
Often. So that's one of the benefits of Union. We're kind of like we have the servicing, but we also have a lot more options that we can find for you.
So
You need that.
are those the two primary places that you can go to get a mortgage, like a bank and then a mortgage company like you
Or
guys?
or a mortgage company.
Okay. So in the U.S., who's the biggest transactor of mortgages out there right now?
Chase is up there. I would say, just because of the amount of market share that they have. And
I would have thought it would have been a
clientele.
mortgage company, like a Guaranteed Rate or somebody like that, just who does the most
Well,
volume.
Yeah, the guaranteed rate's one of the biggest as far as the independent
Oh, I see.
mortgage companies. UWM is number one right now. So there's, yeah,
That means University of Wisconsin Madison.
Yeah,
to me,
exactly.
But that's obviously a mortgage.
United Wholesale Mortgage. Yeah.
United Wholes. Oh, right. So that's basically like the two divisions, right? There's a bank, and then there's
And an independent mortgage company.
is there a third
So
channel of different ways?
There's like a broker
But like
channel.
online, like isn't it like a like Rocket? Isn't that like a online only kind of deal?
It's
or
still
is
a
it-
correspondent lender.
Okay.
But there's also a broker channel. So there's independent guys that just on their own completely that will go out and
Okay.
So that's
Already confusing,
Yeah,
right? Because
yeah.
like, if I'm, especially if I'm buying a home for the first time, like there, we're going to use the internet to, to figure out what,
Yeah.
and who knows. I don't know how good that explanation would be, as far as why someone would use a bank versus like a mortgage company.
Well,
And in layman's terms, um, what would you say about using one versus the other?
so you're gonna have a much smoother experience. It's of course important the actual person that you use too, not just the company.
Yeah.
So a lot of times you're gonna take a recommendation from somebody. So whether it's your friend, family, real estate agent, financial advisor, recommended. But then going to the to an independent lender like Union Home Mortgage, the experience is going to be much better than going through an actual bank.
Okay.
Just based on how we streamline it and our experience and that sort of thing.
All right. So if we're trying to tackle in an hour, which obviously we're not going to succeed, but maybe we'll put a dent in it. Right. So like the one thing that borrowers can do to make this less of a pain in the neck is to take it seriously and get the stuff done
Be
in
quick.
time
Yep.
to the letter. Ask questions if you have them, and if you don't, just like go do it, get it done, and don't take and part of take it seriously. Like no shortcuts. I think that's probably
shortcuts.
right. Like
No shortcuts. Yeah.
I think the example of the screenshot, right? Like, yeah, I just screenshot my bank statement. That should work. It's like, no, we need
Doesn't
full
work.
statements. And yeah, so take this seriously, file it to the letter.
You also got to pick the right mortgage advisor too. That goes back to that. Just like you're going to pick the right real estate agent to make the biggest purchase of your life, you also want the person handling the financing to
So
be
how would somebody know if they're
very-
sitting with with the wrong?
somebody who makes all
Lender.
the mistakes that we were just.
Yeah, but
Like-
I mean, it seems like a fair question, right? Like if I'm
It is a fair question.
if I'm
yeah.
just sitting with somebody for the first time, like I can't know that you're going to make mistakes in the future, right?
Yeah.
And so, obviously, word of mouth, the recommendation,
That's the
is,
biggest.
is
That's the biggest thing.
yeah. So
Yeah, because you're right. Not everybody's going to be able to tell if the person's got confidence.
Yeah.
They don't work in the same business as you, obviously. But so you take your if you got a really good realtor, take their recommendation.
yeah. So how about that? Like, do your homework on the actual loan advisor, right? Because I think by assuming that all of them are going to be generally the same, I
Yeah.
mean, that would be like, saying most doctors are going to be the same,
Yeah.
or most lawyers, or most financial advisors,
Yeah.
and like the user experience could range from a million to one, depending on,
It's not
who
just
you're
the
sitting
wrong-
with. Yeah. So that would be. And I don't think that's obvious at all. I think most
Yeah.
people, even if you've bought 5 houses, like
gotta
you'd
like
probably
them,
use who
yeah.
you're comfortable with, and someone who's demonstrated to you that they're,
Know what they're doing.
and that they're not going to make this a bad process for
Right.
you, right?
So it's not about just shopping for the best interest rate. I mean, we all have pretty similar rates. There's you're
Yeah.
always gonna find somebody that's.
But you
that's
and
the
I both know,
lowest.
like that is
That's
the
dangerous.
number one data point that people use, right?
Yep.
Who's the lowest rate,
Yep.
and they will sort of mold their decision around that, as opposed to making that one of the maybe handful of
Yeah.
considerations that they should.
Like who's gonna get you to the closing table on time, efficiently, and quickly.
Yep.
A lot of these transactions, especially today in the Midwest, very, very low inventory right now. So almost everything we're seeing is multiple offer, fast closings. So
Is there data on which mortgage institutions get to closing on time the most often? Kind of like airlines with the
with
who's-
the on time?
Yeah, no, I mean,
Takeoffs.
it would make perfect sense, right? Like this bank will, this bank reported that 19% of their closings were late, and this one was industry leading at 7%, right? Is there?
I don't have. There's not an exact stat, but there is customer service levels that certain companies are much higher than others, and that's part of the process. That's one, like, did you close on time when they ask those questions in the surveys?
Yeah.
So the overall experience is kind of what they're looking at with those surveys, the JD Power survey.
And people have access to that. I mean, I guess if they have to subscribe to like JD Power, or like, is that widely available on the internet in terms of like customer service satisfaction by lender?
Yeah, you could look at that, and then also we at Union we send out a survey to everybody after the closing, and we complete that, and then we come up with our own statistic based off of those results.
Yeah, but I think you'd be looking for like like a Gallup poll, right? For I don't even know that's probably multiple industries that they collect um,
Tuck the data on.
data
Yeah.
on. Yeah, but like you'd probably want some kind of independent collector and distributor of the data on the lenders, right?
Right.
Because
To interview the clients independently.
yeah, right. If I was looking into your shop, like I probably wouldn't want your shop's data
Yeah.
on
Yeah.
your
Exactly.
own
Yeah.
shop's.
Yeah. You want somebody else some outside service that verified it. But that would involve them having to call the people and pull them, get a hold of them, or someone could voluntarily go
Couldn't you
online to
collect
do
all
it.
the surveys from all the different banks and all the different lending
Suppose
companies
you could do that too.
and take
Yeah.
some kind of aggregate um, statistical analysis and
Yeah.
be
You could
like,
do
yeah,
that.
but nobody. Come on, did we just stumble on something? Are we going to open a data mining company where we're going to sell this research to the? I gotta believe there's somebody out there. That's kind of interesting though. That like you're 19 years in, and that's not an obvious answer of like
It's
here
not.
is who. I mean, JD Power. You hit on them like they collect data about your like from your customers about your.
Well, they're going to collect them from the company, right? So we do the surveys, collect them
Okay,
from the
so then
company.
they probably already do compile the data where they basically like stack rank all of the lenders and like who comes out on top and
Because there's a huge independence factor. Like we can't have any influence over the actual
Yeah.
surveys that we send out, and there's no way to change them afterwards or ask a customer how to do it after the fact after they've already filled it out. So I think it's pretty independent of
yeah.
a process
I mean,
as far
I
as
think
getting
you,
accurate data and not
yeah, I think you buzz killed my idea there because I think JD Power is probably on that. They probably are aggregating all the data about the different lenders. So that's probably and they exist so that consumers can do their research, which nobody does, or they do it to the tune of like 11 seconds on
Yep.
ChatGPT or Claude or
That's
Google.
another
Like
way to do it,
who's
yeah.
the best lender? Yeah, it's also insufficient and doing it in a way where you're just begging to have a bad experience. If you
Yeah.
spend 11 seconds figuring out like who the best lender is to get a mortgage, like I think that's one of those things where you're going to deserve whatever you get.
Yeah.
So if we're telling people like if you like you want to get a mortgage and you want to not get enraged by the process, take it seriously. Vet the lender and vet the mortgage
That's
advisor.
a mortgage advisor. Yeah, if I'm a first-time home buyer, I say you're probably going to get a realtor recommendation, maybe one or two lenders. Just look up the company, like you said, ChatGPT or Claude it. You'll find out Union Home Mortgage is one of the best. So you'll figure that out right away, and then you can go to my site, read my reviews, look at my background, interview me, and then that's kind of how you make the
Yeah.
decision, comparing to a few different lenders. Of course,
No, that's how you'd make the decision. Or that's how like we think a sane person would make the decision. But I think I'm telling you, I think it's more often just asking the person that, oh, my friend Harold knows a lot about buying a house. I'm going to ask Harold who he uses, and then he's going to use that person.
yeah.
Right. So I think actually, honestly, in this advice is don't be lazy.
Don't be lazy.
Take
no.
it seriously.
It's a big
Don't
purchase.
be lazy.
Yeah.
Do your homework.
Don't use your Uncle Joe
This
who
is-
writes 2 loans a year, and just because he's
Or-
Uncle Joe.
and
like,
he's still in jail, right?
Yeah, and he's still in jail, yeah.
Or he's just off parole. I
Yeah.
mean, like let's not.
like
Yeah, just because
same
he's
thing
your
with
uncle.
realtor too.
Same thing with anything.
yeah,
I think our decision and some cool data on how the internet and social media has made us all worse decision makers, and I think some of this is and the other thing that I want to talk about, which is like why are people why are less people buying homes, right? And I think some of the stats are jarring. Some of them are probably just in one ear out the other. They're not anything to get excited about. But so the thing that's interesting to me is how much of this are economic trends and how much of these are societal. So for example, 60, so I guess that'd be 60 years ago. Half of the population under between 25 and 34 lived outside of their parental home were married and had at least one kid. 50%. And that number is now under 25%. Right? So, like, some of this is societal, some of it's economic. I'm interested in, looking at the difference between those two or maybe the overlap. But, like, it's clear that more people are living at home for a variety of reasons. I was actually surprised to hear, though, that in some of, just like any statistic can tell any story that you want to, depending on, how you look at it. So some of them weren't super surprising. Some of them were surprising in insofar as they weren't as drastic as I thought they'd be. But, like, what is your experience? You're coming on 20 years of doing this. Have you noticed any, like, macro changes in who is buying homes 20 years ago versus today?
Well, today the average first-time home buyer is 40 years old, or around 40 years old, when it was only 30 like 10 years ago. So that's pretty nuts, the way how much that's gone up. And I think the biggest thing is going to be the supply side of things, right? So as a country, we're about 4 million homes short. Because we're short so many homes, we have very, very thin inventory, and that's what's driving prices up, even though rates are high, right? So it's driving prices up. It's making homes a lot less affordable for a lot of people because of the supply side of things.
What do you mean by short? I mean, I have my doubtful.
Because the population growth.
So there's 4 million people who would otherwise live in a home that don't, because there's just not enough homes to choose from?
There's not enough homes in the country
being sold.
Being built. So this is brand new homes being added to the existing home population. And that's a much bigger issue that the government's got to solve with deregulation, making zoning restrictions a lot easier, giving incentives to builders, just to build. And it's mainly going to be starter homes that they build, so we can get more people in their 20s and 30s into their first houses. Whereas, 15, 20 years ago, you could buy your first house at 25 to 30, and you could afford it not based on your income. Now, the prices have gone up so much that it's outpacing the income growth. So that's why people can't afford it. Now, if there are more homes built, more choices, prices don't, that would compress the prices a little bit more.
Yeah, starter home was a phrase that came up a lot in the amateur research I did, right, around, like, why are less people buying homes, and the lack of a starter home, just because the affordability has gotten right
out of control.
The easy stats are that median home price has gone up 50% since 2020. I mean, that's 6 years ago.
Supply and demand,
50%.
Yeah.
Was it just supply and demand? Maybe. I don't know. I'm not.
So a lot of people, their opinion is rates are high. That's why people aren't buying houses right now. That's not true, because rates are a little bit elevated, but every house that goes or about to go under contract gets multiple offers. You get multiple people that are trying to buy the same house at higher rates, and it drives the prices up because there's not enough supply out there. So it's not the rate itself.
Not just the rate. Yeah, that's the research that I stumbled on.
But a lot of people think it's because of the rate. So let's just say that rates dropped a full percentage point, right, a week from now. How many more buyers is that going to flood into the market, and what do you think that's going to do to home prices? It's going to drive.
And I think the research was basically told me suggests that rates drive this behavior, right, of buying and not buying, but not as much as you'd think, because it's just part of the picture.
Right.
So when you say supply, I think a component of the supply that's not at all obvious is there's supply in the true sense of the word, right, where 4 million more homes need to be built. I mean, I have a question. I still have a couple questions on that, because that never would have came to mind, right, just in terms of, like, actual number of homes that is causing this problem. One part of the supply problem that I very much do understand is that supply is low when interest rates are high, not just because there's not enough homes that exist, but because there are way more reluctant sellers out there, people who are on the fence about selling or moving, or not selling, and not moving, because they very likely have a mortgage interest rate that is lower or a lot lower than today. So they're disincentivized to move, and so they're not going to put their house on the market where they ordinarily would have if rates were
lower, yeah.
low or lower.
Yep.
And
That's the other part. That plus the supply problem. Those are two things, the major influencers.
Yeah. Here's another problem
But that's for the existing home market, the low rates. The new home market's that's a whole different. That's just builders that have to build more homes. Existing home market is millions of homeowners being locked in at low interest rates.
Yeah. Well, here's another part of it that might, this is more amateur psychology, but could it be that we're a little spoiled from the fact that most of last decade, right, 2010 to 2020, you correct me if I'm wrong here, but like for the better part of that decade, mortgage rates were either insanely low or low, right? And like historically low, whereas like right now they seem high because recency bias. We're just used to what they were
Past
all
10
last
years.
decade.
Yeah.
Was there any point in 2010 to 2020 where they were like normal, like historically normal, or was it they were pretty much low for the whole 10
They're
years?
pretty much low. I thought after the 2008 housing crash, rates started to drop. Historically, they've always been above 7. Prior to that,
yeah.
they were high, they got up to 18% in the early 80s. Now,
81.
if you ask your dad what his first rate was, he's going to tell you 15 to 18%.
Yep. So that's part of it, and that's something that's probably not going to come out in the data, right? But I do think that's it's got to contribute to part of the reluctance or the rationale as to why there is why the size of the reluctant seller community is as big as it is because they're spoiled because they were used to what rates have been. But now that we're getting to the last half of this decade, I would think the recency bias would start to wear off, right? And we're like, this is the new normal. One
It
of
already
my
is,
least
actually,
favorites.
yeah.
Yeah, I think people are getting used to it, but I think it's going to be. I think people are stubborn, particularly when we're being forced to let go of something that they like,
Yeah.
right? And who doesn't like those rates? And people are just going to go back and think like, well, I remember just in 2018, like I could have gotten a house for 3%. It's like, yeah, well, not only is it not 2018 anymore, it was like 8 years ago.
Yeah, exactly.
Okay. So here's some fun trivia that I was curious as to, I guess whether you're a first-time home buyer or just looking for some kind of relief. So let's say you are starting a young family, and where you live, we just happen to live in, you live in Chicago. I live right outside of Chicago, where housing affordability is, it's more of a punchline than it is. And so I was curious what the most affordable in 2026, what the data said the most affordable regions in the country are. So I'm going to give you a couple of guesses at the 5. So Zillow and Realtor.com both did. Most of the names are common to both of the lists, but we'll let you take a stab at some of these because I think these are all pretty surprising. Sort of surprising, but I don't know. I guess you just don't hear these places talked about much. So I guess they were surprising. Once you stop and think about it, like maybe it's not surprising at all.
Yeah,
but,
yeah.
Let's see if you can get any of the top 5.
Oh. Am I just naming them, or are you giving
Just
me a guess?
shoot from the hip. Give me. Are
we saying
few
regions,
guesses.
or because
Yeah, that's a good point.
because Midwest is
let's
one.
Let's go with cities or towns, and if you are in the same ballpark, right? In terms of geography, right? All right, I'll start here because Granite City, Illinois. This was actually not in the top. This was in a separate list called Unicorn Markets, which is where there are homes under 200,000, and there is a strong value growth. Granite City, Illinois. You know where that is? There's no way. I had to look it up too. I mean, we both grew up in
clue.
Illinois. It's a suburb of. It's right outside of St. Louis.
Okay.
Right. So like the theme here is like St. Louis Metro St. Louis made the one of those affordability lists, right? So St. Louis and Metro St. Louis, right, is on that list. So now that I mentioned there's 3 names on this unicorn list: Birmingham, Alabama; Granite City; and Harrisburg, PA, right? So I don't think there's a pattern there. I didn't think that one got one Midwestern place and one Southern and one
Yeah.
Eastern. What's interesting though is that all the names on both lists were all east of the Mississippi. So nothing west of the Mississippi
west of the
in terms of
Mississippi.
affordability. So
That's kind of
maybe that's like
factor
really the
there.
only like macro trend. But yeah, so one of the lists was Birmingham. That was basically top of the list of, and you can't. I mean, you don't live in the suburbs, but like here, you cannot throw a rock without seeing a University of Alabama flag. I think there's been a big push in that school, like recruiting kids from the Midwest to go there. So like Alabama, I don't know if they're having a moment or some kind of resurgence, but I see that flag all the time. I growing up, I never heard of one kid who picked the University of Alabama, and now there's a lot of Midwestern kids that are going there now. Jacksonville, Florida; San Antonio; St. Louis; and Rochester, New York. So we would have been here a long time if I tried to make you guess. Any of those. So the next 2 data points I want to run by you that I think are interesting is I basically was curious at what are some hidden or like not obvious reasons that people are not buying, right? So like the obvious ones, right, are interest rates are high and the stuff is unaffordable. So one of the things that I thought was super interesting was that there is paralysis by analysis going on by way of every social media channel is just littered with just dozens of people that tell people when the best time, not only if and when to buy a house, but where. And timing was a big point of the central theme of this point, right? Because I think a lot of people are just like ruminating on, is this the right time to buy a house? And man, when I get that question about stocks, I just sort of dig in because I know the conversation is going to be a while, because when people are fixated on the right time to do something, what almost invariably ends up happening is nothing, right?
Yep.
Because you'll never be able to talk yourself into like, this is the right time, which is the same way as saying like, when's the right time to sell NVIDIA, or when is the right time to sell this stock or this house that is appreciated, right? Because we're all motivated by either fear or greed. And when things are going well, it's the latter, because then you get fearful of, well, if I sell now, then, what am I going to miss out on? And the same thing for buying, right? Like if I buy now, what if this isn't the right time? And so it becomes way harder to if you frame the decision by, is this the right time? Which I think is way more common if you are prone to using social media to help you with decisions like this.
Yeah.
So to me, that was fascinating. That like, could that be a thing that's actually clogging up the housing market in the U.S.? Is people just stuck because they're listening to donkeys on Instagram telling us like, this is not the right time, or even worse, they'll get that 5 different opinions from 5 sources that they think are credible, and so they're left with the psychological conflict of it's lack of. They all lose credibility, so they don't pick any of them, and so here we are.
My favorite myth is the housing market is going to crash, and I'm waiting for the crash for me to buy something, so I can tell you why that's BS. So let's go back. Let's go back. I'm sorry, to 2008. Right, there's so much supply in the market because of the foreclosure crisis, the subprime crisis, right? That's when prices crashed, right? Because there was so many homes on the market to purchase. Now, moving forward, ever since then and COVID, it's the complete opposite. We don't have enough inventory. We also have a really, really strict credit market, so there's not a lot of foreclosures. There's not a lot of people losing their homes for that reason, because we've made it so much stricter back in 2010 as a reaction to the housing crash. So housing has done nothing but go up since then. So if my whole point is get in now, because you can always refinance the house later when the rates drop, right? If you
Right.
you can't refinance your purchase price, right?
Uh-huh.
You can refinance your rate, and so you got to just make sure you can afford the payment. That's the biggest thing. Can I afford right now comfortably? So if the answer to that is yes, then
Then
now is the right time.
it's the
If
right
I can
time.
afford the house
If
right
and only
now,
if, right?
if and
Like,
only if I
just
can
like that.
afford it right at this moment, what is my monthly payment? And then I'm going to refinance the rate later to get the terms, improve the terms.
Yeah, well, one thing that the financial advisor community has to wrestle with a lot with our clients is trying to condition people that while your house is an investment, it's a place. It's not an investment first. It's a place to live
Place to live,
first,
yeah.
right? So, if you are thinking of your home as a investment vehicle, insofar as like you're trying to time the purchase because you are anticipating that it's going to be worth this much more in this many years, um, that is not a good foundation by which to make this decision. And yet, there's no talking people off that ledge, right? If they want,
Right.
if they want, if they want to think of their house as a piggy bank or as some kind of wealth builder, from my experience, it's really hard to talk them off of that position. So I don't even try. I'll give my opinion on that. Do you? I mean, it sounds like you've got to deal with that too, right? When people are talking about the real estate crash that they are fearful of, and is that the context in which you have that conversation? Otherwise, people who are considering buying just tell you that they're not comfortable buying because they
think
suspect
it's
a crash is coming.
Yeah, and I just have to go back to 2008 and explain to them why we had that crash back then.
Yeah.
It was because of bad mortgages, subprime. Millions of people couldn't afford to be in their houses anymore. The market got flooded with inventory because of foreclosures. Prices crashed, right? But that's not been the case since then. We have the opposite problem. So we don't have nearly enough inventory.
Well, you're doing the thing where you are trying to overcome emotion with logic
Yeah.
and facts. Sometimes it works, but man, it
Doesn't always, but-
I think it more often than not doesn't work. I think if this is probably coming too close to giving you advice, but I think the position that those people are taking is very much rooted in emotion, particularly fear. I'm going to buy this house, and the housing market is going to crash. I think one thing that might be informative for you in that context is you could layer in like the data and the history of what actually happened, but I don't know. It seems to me like if you focus on you're buying a place to live, and you're not buying a place that you are anticipating selling for a profit. It'd be nice if that happened, but like that's not what motivated anybody to buy their house. Let's
Yeah.
say the boomers that everybody makes fun of because their house is worth 20 or 30 times what they bought it for back in the 60s or 70s. Like they didn't know that at the time.
didn't know that
That's not
back
why they
then.
bought the house. They bought the house because they what happened to the house is what happens to just about any commodity if you have a boatload of time. You buy it, you leave it alone, and it's worth way more than you ever thought it would
Yep.
be. No different than those shares of IBM or the house.
So you're
or
thinking like the stock
savings
market.
bonds.
Yeah.
Right, but directionally that's right. It's also a dangerous comparison to make directly because like then if you run the risk of them thinking of their house like a stock, right?
That's true.
But you're trying to get to a particularly dynamic in investing in stocks, which is the best way to do it is to do it. Forget that you have it. Leave it alone for a really long period of time, which to me is a great way to buy just about anything.
Yeah.
But I think our tolerance for waiting and being patient is,
Low.
it's less prevalent than it
Yeah.
used to be. And look, that's not saying that you should ignore. But one of my own maxims for, I've had this conversation a number of times. Like I'm thinking about buying a house, and when people ask me like, "Do you think I can afford this house, or do you think I should buy it in general?" And one of my hard and fast rules, that, and I'm interested to see what you have to say about this, is I will say, if you can't mentally commit to living in this house that you want to buy in 10 years, I don't think you should buy it. To which I'll say, like, why? You don't think it's going to go up? I'm like, and to which I'll say, I don't have the slightest idea if it's going to go up or down. My point is, but you don't either. And unless you are okay with taking a loss, because when things go down in value, whether it's stocks or real estate, it's not like we get notice, right?
Right.
Or see it coming. So the question that I'd ask to the person who wants to buy a house when it's sort of borderline as to whether they can afford it or not, I'll ask them, like, if this goes down in value by 20% unexpectedly, would this hurt you financially? Like, actually hurt you, as opposed to more being like, a nuisance? And if the answer is yes, and like, and usually when people are thinking about making that decision, they're going to borrow as much as they can, and they're going to really stretch their debt to income
Yep.
budget, and they're going to borrow as much as they can. Like, usually that event of it going down by 20 will leave them in a bad spot, to which leads to, like, maybe rent for a year if you don't think,
Well,
if there's a reasonable chance you're not going to live here, in 10 years, let alone 5. To me, it's just buying seems like a bad idea.
And I tell people 5 to 10 years is usually the time frame, because even if you do sell it in 2 years and let's just say it's appreciated, best case scenario, you got realtor commissions, closing costs, all
Yeah.
this stuff that is probably going to wipe out a lot of your gains, right? So you hold it at least 5 years.
Yeah.
And like you said, you have to be mentally prepared. You also have to love the house, because it is a place to live. It's not just an investment. So you have to love the house. You have to be able to afford the monthly payment. So those are the kind of the main things that I would say.
Yeah, it's hard to get people away from thinking of their house as a wealth builder.
And then that's not the only thing I talk about as well. Wealth build. I have to bring in some of the emotional stuff about it.
Yeah, and look, the reason I say 10 years instead of 5 is that if it's 10, it just gives you more time to recover from a price decline, right?
If there is a price decline.
But if it's 5, and housing market goes down in year 3 or 4, like, there's not going to be any time to recover for it. So that's a pretty conservative maxim, I would say. But like, I don't know. I don't think it's a bad one, because if my job is to help people make the best decisions possible for them and their family, I just think there's more to lose than there is to gain by buying a house when you're just overstretched.
Absolutely, yeah. It's not just what the bank or the lender can qualify for; it's what are you comfortable with, right?
Yep.
That's when in my initial initial interview that we talked about at the beginning. That's one of the things I tell them: this is what you can afford, but what are you comfortable with? Like, what is your max budget? And I'm going to build this whole thing around what you're comfortable, what you can afford monthly. Nothing that makes you feel uncomfortable. You give me that number, and then I'll build your purchase price and your loan structure around that.
Yeah. Well, I just hope that more people come out of the woodworks and buy. There is a unique satisfaction that comes with owning a home that has, like, nothing to do with it being monetary, right? It's just like knowing that a place is yours.
Yep.
I lived in a high rise for over 15 years, and living in the first house just 5 years ago, which was like way later than most people. Like, I couldn't believe how much satisfaction I had out of just, like, having a backyard. Like, that was mine. I could sit there. And so I just hope the societal trend, whatever it is, that's moving away from people buying homes, starts going in the other direction. Because I also think it's a thing that builds community. It's harder to build a community when more people are sequestered in apartments, and 'cause when you buy a home, you've got neighbors, and you have a community that you live in, and there's an opportunity to be like a good neighbor, and all this, like, civic stuff that I thought was corny when I was a kid. It's like, I don't know, I'm 5 years into it, and it's nice to I live in Elmer. It's nice to go across the street and see just retirees just hanging out and commiserating in the Park District workout facility across the street. It's like a really cool thing.
It's a cool sense of community.
Yeah, that's much harder to achieve when people are just alone, and
In a rental, yeah.
and I can't imagine there's any data on this, but it did make me wonder if COVID and being isolated is part of what's driving people to not buy homes, because it's easier to stay isolated if you are in an apartment. That data would pretty much be impossible to come by. But I hope that's not true, and I hope that's not how this bears out. But it did make me wonder if, us being by ourselves for 2 or 2.5 years, you tell me. I still think we both come across people who are still, affected by
affected a lot of people,
by
yeah.
having been alone for that long, and now that we're coming up on 5 years of being out of that, hopefully, that becomes in our past, but
Yeah.
I don't think it's gone away altogether.
Not completely. I'm optimistic though, as time goes, it's going to heal as we go forward.
Yeah. So, how can the few dozen people that end up watching this video, how can they find you? Is there can we put your Instagram handle on here?
Absolutely.
And all right. So, Ethan,
JimBoston.us that's the microsite that I have, and that'll lead you to everything else. So that'll
Okay.
lead you to the
So
Instagram, Facebook, LinkedIn, all that other good stuff, and my Union Home Mortgage website as well.
Union Home Mortgage.
Yep.
Not the University of Wisconsin-Madison
Yeah, no.
place. Which I didn't even know that was
No.
a thing. Well, I think people should talk to you if they're gonna to buy a house, because our homework is who you pick is important, and we've identified that for the borrowers, it's take it seriously, don't be lazy.
Do it quickly. Yeah.
Yeah, and do your research. Well, do the test quickly, but do the work up front. Do some work up front, that quick or no quick. Just find the right lender, and not just who your uncle recommends, or your uncle if someone recommended him.
And one thing that's really important in this market, because everything is multiple offers, most listing agents are going to require a full approval. So they're going to require that your lender did all that upfront work before they'll even accept your offer. Because listing agent gets a bunch of offers. Let's say they get 6 of them, right? A couple of them are just general pre-approvals, just credit checks.
Okay.
The other important thing is your loan officer calls the listing agent right when the offer goes in, just to sing you praises, talk about how well they qualified you, vetted you, because you want to make that seller comfortable.
Yeah. So wait, what was that for the first one? So in this market where it's super competitive, the borrower should do what? The borrower needs to make sure they have a
a fully underwritten approval.
And dumb question, what's the other kind of approval?
The other kind of approval is just a general. The loan officer interviews them, pulls their credit, gives them a letter. They don't verify income. They don't verify assets.
Oh, is that the old pre-approval letter that we used to get at the bank?
Yeah, so I'm talking about a full approval letter to where.
Oh, I think it's important, because I think I until
it's becoming the norm
until
now.
13 seconds ago, I thought the pre-approval letter was the only kind of letter out there. So what's this?
This is just a conditional. It's an approval letter, right? And what it says, what my letter says, is that this is subject to the appraisal, the title work, and the insurance, anything related to the property. So anything we don't know about. But I'm bringing you this buyer that is fully ready to go, fully clear to close, as long as the collateral qualifies, which we have no control over at that point. But
oh, man.
If I'm a listing agent, I hear that, and I know the lender's got a good reputation personally and his company, and I know all that stuff. That's how I've been winning a lot of offers lately. I'm telling people it's mandatory that you have to, because I want to put my client in the best position to win. And I want to help my real estate partners out as too, right? They're in the competition too. They want to.
Yeah. No, that's. I mean, so the old document was called the pre-approval letter.
It's still called a pre-approval or a pre-qual, but this is a full approval letter. Like we've fully gone through underwriting. We've approved the borrower.
So if you're in a competitive situation, don't get a pre-qual letter that doesn't stipulate full approval.
Yep, because if you're a good real estate agent is going to call every single lender, and they're going to ask them, did you fully approve this person, or did you just pull their credit and slap it on a piece of paper? I take it a step beyond that, though. I don't wait for the listing agent to call me. I'm calling within a half hour when the offer goes in, and they like that proactivity as well. So.
But you're calling.
I'm
who?
calling the listing agent to say, hey, my offer just came in from the Smiths. They're solid. I got them through underwriting. Like, awesome, Jim. I'm glad I didn't have to chase you down, because a lot of times these agents are trying
Wow.
to find these lenders. They're calling them and they're not answering their phones, or if it's the weekend, they're not available till Monday.
No, that's
9
good to know that
5.
because I think the general public would assume that a pre-qual letter would
Is-
just automatically do all that.
Ooh, yeah, no, because we haven't verified the income. What if the person is self-employed? Like, what if they, you got to have a certain history? We haven't looked at the assets to see if they have enough down payment to put down. I mean, I've seen deals fall apart where the lender doesn't even verify the assets, and then it comes closing time, and they're like, "I don't have enough money." It's like,
And if this part of this video helps one person get the house they ordinarily wouldn't have
then it's
gotten,
worth it. Yeah.
then we're just doing
But-
some good in the world, Jim.
But I gotta say, if
think-
you're to speak to the public, if you have a loan officer, if they don't call the listing agent when your offer goes in, you should fire them, because that's the no.
I mean, I don't think people would even know
They
to
have to
ask.
do that
They wouldn't
now.
even know to ask.
They wouldn't know
that
to
or-
ask,
or-
no,
or
but-
ask that. So they should just call you instead.
But yeah, but I mean, if I'm a selling agent, just put yourself in their position. You got an anxious seller that wants to sell it. Your job is to find them the best buyer. So you want you want to connect with the buyer representation to make sure that they're really good and they fully vetted that
Yeah,
person.
I mean, the only problem is that I can promise you the borrower is not thinking anywhere near that far.
No,
down the
they're
line,
not.
right? Of a listing
But
agent, and is
my
this
job is-
person calling this?
That's what sets us. That's my job, is to think ahead of that and
All right. Well, you heard it, borrowers.
Yep.
Do all that. Do your homework. Take it seriously, or just call Jim. So
just call Jim. Yeah.
just call Jim. So that's it for today. We will see you next time.